Morning. In my previous video, we had discussed about these golden rules of accounting, and we also discussed about application of these golden rules of accounting. Then later, we had taken around 2 to 3 examples in connection with application of these golden rules of accounting. As we all know that there are three accounts in English system. First one is personal account, second one is real account, and third one is nominal account. Here, personal account, as we all know that it deals with person, firm, institution, organization, etc. So the debit and credit rule of this particular account is debit is the receiver and credit is the giver. If person is receiving the benefit, we need to debit his account. And if person is giving the benefit, then we need to credit his account. That is personal account. And second one is real account. This particular account is deals with assets. It deals with assets or properties of the business. So the debit and credit rule of this particular account is debit what comes in and credit what goes out. It means if asset is coming into the business, we need to debit that particular asset account. And if asset is going out of the business, we need to credit that particular assets account. That particular account is known as real account. And third one is nominal account. As we all know that this particular account, it deals with expenses and losses and incomes and gains. It deals with expenses and losses and incomes and gains. So the debit and credit rules of this particular account is debit all expenses and losses, meaning if there are any expenses and losses, we need to debit them. And if there are any incomes and gains, we need to credit them. So the rules of this nominal account is debit all expenses and losses and credit all incomes and gains. That particular account is known as nominal account. Yes, as I told you people that we need to follow around 3 to 4 important steps in order to apply these golden rules of accounting. Which are those steps? Here, first step is we need to find out the two accounts or aspects that are involved in business transaction, Then afterwards, we need to find out those two accounts are belongs to which category, whether they are personal account or real account or nominal account. Here, both the accounts maybe belongs to same category, or one account maybe belongs to one category and another account will be belongs to another category. So first we need to find out two accounts. Then once we found out two accounts, we need to find out those two accounts are belongs to which category. Later, we need to apply the respective rules of that particular account. Then later we need to write later we need to write the particular account is to be debited and the particular account is to be credited. So these are some rules that we need to apply at the time of applying golden rules of accounting. In my previous class, we took these three examples in connection with application of golden rules of accounting. First one is commenced business with cash rupees 1,75,000. Right now, don't bother about amount. Just concentrate on two accounts in a transaction. Here, commenced business with cash, meaning the money is invested into the business worth rupees 1,75,000. So here two accounts are there. As I told you people, identifying two accounts is very important and it is not so difficult. You people should see that which are the two accounts, or here among two accounts, one account will be receiving the benefit and another account will be giving the benefit. So we should see that which account is giving the benefit and which account is receiving the benefit. Here, owner invested money into the business. He invested cash into the business. So cash account is receiving the benefit and owner's account is giving the benefit. So here two accounts are, one is cash account and another one is capital account. As we all know that capital account, it represents owner. Here, next, yeah, first we need to find out two accounts. Later, once we found out two accounts, we should see to it that these two accounts are belongs to which category. Here cash account, it is a asset, so it is real account. Capital account, it represents owner, so it is a personal account. Now we should apply the rules based on the situation. Yeah, here if it is a real account, we should check whether this asset is coming into the business or it is going out of the business. If it is coming into the business, we need to debit it. If it is going out of the business, we need to credit it. So here cash commenced business with cash, meaning cash is coming into the business. So we need to debit cash account. What is the debit rule of real account? Debit what comes in. So cash comes in, we need to debit cash account. Now move to second one, that is capital account. As we all know that it is personal account. Now we should check with the rules of personal account. What is the rule? Debit is the receiver, credit is the giver. Now we should check here, owner is the receiver of the benefit or he is the giver of the benefit. Yes, actually here he is the giver. Commenced business with cash, meaning money is invested into the business. So here owner is the giver. That is the reason credit rule of personal account is applicable. Understood? That is the reason credit which account? Capital account. So debit cash account, credit capital account. And here second example is goods purchased for cash, goods purchased for cash. Here which are the two accounts? Here two accounts are there. One account is receiving the benefit and another account is giving the benefit. Which account is receiving the benefit? Purchases account is receiving the benefit. We cannot call it as a goods account. Actually, I told you people that there is no account called goods account. There are two accounts which represents goods. One is purchases account and another one is sales account. So goods purchased is always purchases account. Goods sold, it is always sales account. So here goods purchased for cash, two accounts are, one is purchases account and another one is cash account. So purchases account and cash account. Okay, purchases is which account? Is it a asset? No. Is it a person? No, it is expenditure. So expenses are belongs to which account? Expenses are belongs to nominal account. Yes. Cash is an asset. So assets are belongs to which account? Real account. Now let's see that which rule is applicable. Debit rule is applicable to which account and credit rule is applicable to which account. Here it is nominal account. What is the debit and credit rule of nominal account? Debit all expenses and losses, credit all incomes and gains. So debit all expenses and losses. Purchases are expenses, so we need to debit purchases account. And here asset is there. Understood? Real account, cash is there. So we should see to it that cash is coming into the business or going out of the business. If it is coming into the business, we have to debit it. If it is going out of the business, we have to credit it. Because what is the rule of real account? Debit what comes in, credit what goes out. If it comes to business, debit it. If it goes out of the business, credit it. So purchased goods for cash, meaning here cash is going out of the business. So we need to credit which account? We need to credit cash account. Okay. Yeah, it is very important transaction. In my last class, I was telling you people how to identify cash transaction and credit transaction. So once again, I will make it very clear to you people. In a transaction, especially in case of purchases and in case of sales, suppose if they claimed the name of the person in a transaction and if they not specified for cash, it indicates what? It indicates that it is a credit transaction. And in a transaction, if they not claimed the name of the any person, then it indicates what? It indicates that it is a cash transaction. Usually in case of credit transaction, they will claim the name of the person because at that time person is very important because you sold goods on credit. Suppose we'll take one example. We sold goods to 100 customers and for 90 customers, we sold it on cash basis and to 10 customers, we sold it on credit basis. As far as those 90 customers are concerned to whom we sold goods on cash basis, that we no need to bother to that extent because we already collected cash. But if it comes to these 10 customers to whom we sold goods on credit basis, we need to maintain their account because we sold them goods on credit basis. Understood? So if it comes to credit transaction, person is very important. And if you found the name of the person in a transaction, it indicates that that particular transaction is a credit transaction. Sometimes it so happens they will claim the name of the person. Further, they specify for cash, like sold goods to Ramesh for cash, rupees 30,000. It is not a credit transaction because they claimed the name of the person. Further, they specified for cash. That is the reason it is a cash transaction. It is not a credit transaction. So here in this particular transaction, sold goods to Ramesh rupees 30,000. Here they claimed the name of the person, that is Ramesh, but here they not specified for cash. It indicates what? It indicates that it is a credit transaction. So in case of credit transaction, one will be person's account, and the another account will be that purchases account or sales account. Here sold goods to Ramesh, right? So one is Ramesh account and another one is a sales account. Suppose if it was a cash transaction, like sold goods for cash, two accounts were coming. One is a sales account and another one is a cash account. Since it is credited transaction, cash account will not come. Which account will come? That person's account will come. So two accounts are, one is Ramesh account and another one is a sales account. Okay. Ramesh is which account? It is a personal account. Sales is which account? It is a nominal account because it is income to business. It is income to business. That is the reason it is nominal account. Now let us apply the rules of personal account. What is the debit rule of personal account? Debit is the receiver. Credit is the giver. So here sold goods to Ramesh. Ramesh is the receiver. So we have to debit Ramesh account. And sales are income. What is the rule of nominal account? Debit all expenses and losses, credit all incomes and gains. So we have to credit sales account since sales are income to business. It is how we need to apply these golden rules of accounting to the business transaction. Okay, let us move to next transaction. Next transaction. Yeah. Transaction is, it is paid wages rupees 50,000. Yesterday I told you people that paid and received always indicates cash, always indicates cash. Suppose if it is paid by check, then it indicates bank, it indicates bank. Okay, so paid wages rupees 500. Which are the two accounts? Here two accounts are, one is wages account, one is wages account and another one is cash account. Another one is which account? It is cash account. Now, wages is which account? Wages is actually nominal account. Why it is nominal account? Because it is expense. It is expense. And cash is which account? Cash is real account. Why? Because it is a asset. Now, we'll apply the debit and credit rules. Here, wages paid. Wages are expenditure. What is the rule of nominal account? Debit all expenses and losses. So, since here wages are expenses, we have to debit which account? We have to debit wages account. Further, here cash account is there. It is real account. We should see whether it is coming into the business or going out of the business. What is the rule of real account? Debit what comes in and credit what goes out. So wages paid wages, meaning cash goes out of the business. Since it goes out of the business, we need to credit cash account. We need to credit cash account. Okay. Hope you people are understanding. Yes. Okay. Let us move further now. Let us move further. Yeah. Here is the transaction that is sold goods for cash rupees 10,000. Sold goods for cash. You can see the difference between these two transactions. Third transaction and fifth transaction. In third transaction, they said that sold goods to Ramesh. And in fifth transaction, they said that sold goods for cash. See here, if they claimed the name of the person in a transaction and if they not specified for cash, it always indicates that it is a credited transaction. And in credited transaction, name of the person is very important. Okay. Sold goods for cash. Which are the two accounts? Which are the two accounts? One is cash account. One is cash account. And another one is sales account. Another one is which account? It is sales account. Okay. Now we'll see. Yeah. Cash is which account? Cash is which account? Cash is a real account. Why? Because it is a asset. Sales is which account? Sales is a nominal account because it is income. Because it is income. Understood? Okay. So cash is real account and sales are nominal account. So which rule is applicable now to cash? Debit rule is applicable or credit rule is applicable? If it is coming into the business, debit rule is applicable, and if it is going out of the business, credit rule is applicable. So here sold goods for cash. Cash is coming into the business, so debit rule is applicable. And in case of sales, they are income to business. So credit all incomes and gains, which is the rule of nominal account. So which account should be credited now? Sales account should be credited. So to sales, which rule is applicable? Credit rule is applicable. Understood? Okay. Further, let us move to next transaction. It is paid for trade expenses. Paid for trade expenses. Paid, it always indicates cash account. Understood? And another account is a trade expenses account. So here two accounts are, one is a trade expenses account, one is a trade expenses account, and another account is which account? It is a cash account. Another account is a cash account. Fine. Trade expenses is which account? Nominal account. It is which account? It is nominal account because it is expenditure. Cash account is which account? It is real account because it is a asset. It is a asset. Okay. Now, which rule is applicable to trade expenses of nominal account? Debit rule is applicable because debit rule states that debit all expenses and losses. So, trade expenses account should be debited because it is expense, and cash account should be credited because it is going out of the business. Paid trade expenses, no, so it is going out of the business, we need to credit cash account. We need to credit cash account. Okay, we'll proceed further. We'll proceed further. Okay, yeah, just I will simplify this particular transaction now. Only will not take bit complicated transactions, will take it later. Yeah, I will make it as sold, sorry, cash received from Ramesh rupees 30,000. This is the transaction. Okay, cash received from Ramesh rupees 30,000. Cash received from Ramesh rupees 30,000. Okay, now which are the two accounts? One is cash account, one is cash account, and another one is which account? Ramesh account. Is there any other possibilities? No. One is, one account receives the benefit, another account gives the benefit. Which account is receiving benefit? Cash account. Which account giving benefit? Ramesh account. So these are the two accounts. Yeah, cash is which account? It is asset. So it is a real account. And Ramesh is which account? It is a personal account because Ramesh is a person. Ramesh is a person. Okay. Now, we should check, cash account should be debited or it should be credited. Yes, it should be debited. Why it should be debited? Because here cash is coming into the business, right? What is the rule of real account? Debit rule. Debit what comes in? So debit cash comes in. So cash account should be debited and another account should be credited. Which account should be credited now? Ramesh account should be credited because here Ramesh is personal account. Since the debit rule is applicable to cash account, credit rule should be applicable to Ramesh account. So Ramesh is the receiver or he is the giver. Cash received from Ramesh means Ramesh is the giver. Credit is the giver. That is the reason we are crediting which account? We are crediting Ramesh's account. Okay. Let us move to next transaction. Yeah. Before that, one more clarification I wish to give you people. Yeah. uh, goods sold to Ramesh and received cash rupees 30,000. Goods sold to Ramesh and received cash rupees 30,000. Here, which are the two accounts? Goods sold to Ramesh and received cash. Since it is cash transaction, person is not important. What is important? Cash is important and sales is important, not Ramesh. Are you getting my point? Okay. So let us move to next transaction, eighth one. Goods purchased from Sudhir, rupees 27,000. Goods purchased from Sudhir, rupees 27,000. So which are the two accounts? Goods purchased. One is a purchases account, one is a purchases account, and another one is which account? Another one is Sudhir's account. Why Sudhir's account? Because it is a credit transaction. If it was cash transaction, they were not giving the name of the person. And if they were giving the name of the person, they were specifying for cash. So here goods purchased from Sudhir. Goods purchased from Sudhir, it is a credit transaction. So person is important. So two accounts are, one is purchases account and another one is Sudhir's account. Identifying two accounts is very important. Further task will be very simple. Understood. And identifying two accounts is not difficult task. Just see that which account is receiving the benefit and which account is giving benefit. Yes, here two accounts are purchases account and Sudhir's account. Purchases is which account? Purchases is actually nominal account. Nominal account. Why it is nominal account? Because it is expenditure to business. Now, Sudhir is which account? Sudhir is a personal account because Sudhir is a person. Understood? Now, let's see which rule of nominal account is applicable to purchases. Actually, debit rule is applicable. Why debit rule is applicable? Because purchases are expenses. So, debit which account? Debit purchases account. Credit which account? Credit. We have to credit Sudhir's account. Why we need to credit Sudhir's account? Because Sudhir is the giver. Purchased goods from Sudhir. So, Sudhir is the giver. Are you getting my point? So, purchases are expenses, debit purchases account, and Sudhir is the giver. So, credit Sudhir's account. Okay. Let us move to next transaction. It is cartage paid rupees 1000. Cartage is nothing but the term that we will use is coolie. Coolie is nothing but cartage charges. It is not that computer cartridge. It is cartage. Cartage is nothing but that hawkers and peddlers, that what hamali coolie we will call. That is what that is cartage. Yes, cartage paid. So which are the two accounts here? One is cartage's account or cartage account, and another one is paid. No, so paid. What it indicates? It indicates cash account. It indicates cash account. So cartage paid. Cartage is what? Cartage is a expense. So expenses are belongs to which account? Expenses are belongs to nominal account. Now next one is cash account. Cash account. Just a minute. Next one is cash account. Yeah, nominal account. The next one is cash account. Cash account is which account? Cash account is actually real account. Which account it is? It is a real account. Okay, fine. Now, cartage's account should be debited or it should be credited? Yes, it should be debited. Why it should be debited? Because it is expense. It is expense. So, debit cartage's account. What is the rule of nominal account? Debit all expenses and losses, credit all incomes and gains. Okay, now cash account is real account. It is coming into the business or going out of the business? It is going out of the business. That is the reason we have to credit cash account. Debit what comes in, credit what goes out. This is the rule of nominal account. Okay. Yeah, let us proceed further with next transaction, 10th transaction. It is drew cash for personal use. Drew cash for personal use. Okay. Yeah, drew cash for personal use. I told you people something about drawings. I told you people something about drawings. What is drawings? Money or money worth withdrawn by owner from business for personal use is called as drawings. Is called as what? Is called as drawings. Understood? So here drew cash for personal use. It is nothing but drawings. Understood? So here two accounts are which account? One is drawings account and one is drawings account, and another one is which account? It is cash account because he withdrawn cash. Yes or no? So which are the two accounts? One is a drawings account and another one is a cash account. Okay. Now drawings account is which account? Drawings account is a personal account because it's indicated. So it is representing the owner who has withdrawn cash from the business for personal use. Who has withdrawn cash from the business for personal use. Then second one is cash account. Cash account is which account? Cash account is actually real account. It is a real account. Okay. Yeah. Now let's see which account should be debited and which account should be credited. Actually, we should debit a drawings account. Why we should debit a drawings account? Drew cash for personal use. Here, owner is the receiver. Understood. Debit is the which account rule? Personal account rule. So debit which account? Debit drawings account. Debit drawings account, and credit which account? Credit cash account. Why we need to credit cash account? Because cash is going out of the business. Understood? Yes, it is how we need to apply the debit and credit rules of accounting. Okay. Yeah, we'll proceed further. We'll proceed further. We proceed further. Just a minute. Yes. Okay, fine. Yeah. Uh, Here, that transactions, they are going to be bit difficult. I'm not going to take same transactions again and again. There will be certain changes. Yeah, okay. Now let us move to next transaction. This is all about Apurva started business with cash rupees 50,000 and machinery rupees 40,000. Apurva started business with cash rupees 50,000, machinery rupees 40,000. So which are the accounts here? I told you people that every transactions will be having minimum two accounts. I never said that there will be only two accounts. I said that there will be minimum two accounts. But in this particular transaction, we are finding three accounts. How many accounts we are finding? We are finding three accounts. Which are those three accounts? One is Apurva's account, another one is cash account, and third one is machinery account. But in accounts, we should not write Apurva's account. We should write capital account because capital account indicates or it represents Apurva. It represents Apurva. So owner is different and business is different. Understood. So we should not write the account in the name of Apurva. We should write the name of the account in the name of capital. Understood. So here three accounts will come. First account will be cash account, right? Then second account will be machinery account. Second account will be machinery account, and third account will be, actually it is Apurva's account, but here we should write capital account because capital account represents Apurva. It represents Apurva. It is not at all difficult. There are three accounts means it does not mean that it is very complicated or it is very difficult. Simple aspects. We need to just apply our basic knowledge. That is what we have studied till today. Yeah. So here cash account is which account? Cash is asset, no? So it is which account? It is real account. Machinery is also asset. So machinery is also which account? Machinery is also real account. Now capital account is which account? Actually it is a personal account because capital account, it represents owner. It represents owner. So now in this particular situation, what happens is one or two accounts debited and another account will be credited. I mean, two accounts may be debited, one account may be credited, or one account may be debited, two accounts may be credited. Let's see what happens here. Cash account, machinery account, and capital account. We know that cash account is real account. Apurva started business with cash. Cash is coming into the business or going out of the business. Actually, it is coming into the business, right? Apurva started business with cash. Think from the point of business. Business is receiving that cash, no? So cash is coming into the business. So debit what comes in is the rule of real account. Debit what comes in, debit cash comes in. So cash account should be debited. Okay. Now, Apurva started business with cash and machinery. So cash comes in at the same time, even machinery comes in. Understood? So machinery account should be debited. Machinery account should be debited. Machinery is also asset. It is real account. What is the rule of real account? Debit what comes in and credit what goes out. So here machinery is coming into the business. We are debiting machinery account. Then now capital account. See here, since yeah. Since cash account is debited and machinery account is debited, which account should be credited? Capital account should be credited. Why capital account should be credited? Because that owner is the giver. Owner is the giver. So which account should be credited now? Capital account should be credited. Capital account should be credited. So once again, I will repeat. Apurva started business with cash and machinery. Leave that amounts now. We'll concentrate on it later. So Apurva started business with cash and machinery. What comes in? Cash comes in. So cash account is debited. Machinery comes in. Machinery account is debited. Who is the giver? Owner is the giver. So that is the reason whose account is credited. Capital account is credited. Which account is credited? Capital account is credited. Okay. Yeah. Very simple aspects. The only thing is we need to apply the accounting knowledge and logic. Both knowledge and logic are very important as far as accountancy subject is been concerned. Okay. Now let us move to next transaction. It is a deposited into bank rupees 30,000. What it is? It is a deposited into bank rupees 30,000. So which are the two accounts here? Deposited into bank. One is a bank account. One is a bank account and another one is which account? Another one is a cash account. Another one is cash account. You people should check that which are the two accounts. I mean, which account is receiving the benefit and which account is giving the benefit. You have taken cash and you deposited into bank. So which account has received the benefit? Bank has received the benefit. So one is bank account. And which account has given the benefit? Cash account is given the benefit. So another one is which account? It is a cash account. Okay. Now bank is which account? Bank is which account? Actually, bank is an artificial person. So it is which account? It is a personal account. It is a personal account. Cash is which account? It is cash is a real account. Which account it is? It is a real account. Okay. Now let's see which rule is applicable to bank. Bank is personal account. Either it should be the receiver or it should be the giver. So deposited into bank rupees 30,000. So here banker is the receiver, right? Deposited into bank rupees 30,000. Here banker is the receiver. So debit is the receiver. Who is the receiver? Banker is the receiver. So debit which account? Debit bank account. Now cash comes into the business or goes out of the business. Since you are depositing cash into the bank, right? Cash is going out of the business. So which account should be credited? Cash account should be credited. Understood. So it is how we need to apply these golden rules of accounting. We'll proceed further. We'll proceed further. We'll discuss few more transactions. Yeah. Okay. Yeah. Already we went across this kind of transaction, that is purchased goods from Asha rupees 20,000. Okay. So here transaction is purchased goods from Asha rupees 20,000. Tell me, it is cash transaction or credit transaction? It is credit transaction because here they claimed the name of the person. Asha is there. That is the reason it is credit transaction. Even if Asha is there, if they were specifying for cash, then it was becoming cash transaction. But here they not specified for cash. Just they are given the name of the person in a transaction. So what it indicates? It indicates that it is a credit transaction. In case of credit transaction, what is important? Person is important. Okay. Yeah. Purchased goods from Asha rupees 20,000. Which are the two accounts? One is purchases account. One is purchases account and another one is which account? Asha's account. Another one is Asha's account. Okay. Purchases are which account? Purchases are actually nominal account. Why they are nominal account? Because they are expenses to business. They are expenses to business. So Asha is which account? Asha is a personal account. Asha is a personal account because she is a person. Okay. Now, which rule is applicable to this purchases account? Debit rule is applicable. Why? Because it is expenses to firm. Purchases are always expenses. Sales are always income. So purchases are always debited and sales are always credited. So here debit which account? Debit purchases account because they are expenses. And next one is Asha's account. Of course, Asha's account should be credited. Why Asha's account should be credited? Because she is the giver, right? Purchased goods from Asha. Asha is the giver. Understood? Personal account. So credit which account? Credit Asha's account. Okay. Let us move to next transaction. That is sold goods to Rahul for cash. Sold goods to Rahul for cash. Which are the two accounts here? It is cash transaction or credit transaction? It is cash transaction because here clearly it is specified for cash. Understood? Always name of the person in a transaction won't represents credit transaction. If they claimed the name of the person, if they specified for cash, then it indicates that it is a cash transaction. And in case of cash transaction, person is not at all important. So which are the two transactions? Oh, sorry, which are the two accounts? One is a cash account and another one is which account? Another one is a sales account. Another one is a sales account. Sold goods to Rahul for cash. So sales account is receive sold goods to Rahul for cash. Okay. So cash account is receiving the benefit and sales account is giving the benefit. So these are two accounts. Cash account is which account? Cash account is actually real account. Okay. Sales account is which account? It is nominal account. Why it is nominal account? Because it is income to business. Okay. Now let's see whether cash account should be debited or it should be credited. Here cash is coming into the business or going out of the business. Sold goods for cash. It means cash is coming into the business. So debit which account? Debit cash account because it is coming into the business. Credit which account? Credit sales account because the sales are income to business. Credit sales account because the sales are income to business. Yes. Okay. Yeah. Again, I will simplify this transaction. I will teach this kind of difficult transaction in my further classes. Okay. Yeah. Now, what is the next transaction? Next transaction is received check from Sandesh, rupees 20,000. We are receiving check from Sandesh, rupees 20,000. So, which are the two accounts? One is a check and another one is a Sandesh. And check is always represents whom? It always represents banker. So received check from bank or sorry, received check from Sandesh. Received check from Sandesh rupees 20,000. So here received check from Sandesh rupees 20,000. Okay, just a minute. Suppose if it is received cash from Sandesh, we were writing two accounts. One is cash account and another one is a Sandesh account. Here, instead of receiving cash, we have received check. So that check always represents whom? Bank. So here two accounts will be, one is bank account and another one is a Sandesh account. One is which account? One is bank account and another one is which account? It is Sandesh account. Sandesh account. Suppose if it is received cash from Sandesh, we were writing two accounts, no Sandesh account and cash account, but it is received check. Understood? So we are writing two accounts. Check, suppose if we received check, if we paid something by check, it always represents whom? It always represents bank. So here two accounts are, one is bank account and another one is a Sandesh account. So received check from Sandesh. We received check from Sandesh and immediately deposited into bank. So who is the receiver? Actually, banker is the receiver. Who is the giver? Sandesh is the giver. Yes, of course, we received that check. But here we received it and we deposited it. So who is the actual receiver? Banker is the actual receiver. Understood? Okay. Yeah. Before that, we'll decide which are these two accounts. I mean, they are belongs to which category. Bank is personal account. Bank is personal account because it is institution. Sandesh is which account? Sandesh is personal account because he is human being. Understood? Okay. Now, both are personal accounts. So, debit is the receiver, credit is the giver. Who is the receiver? Banker is the receiver. Understood? So, debit which account? Debit bank account. Who is the giver? Sandesh is the giver. So, credit whose account? Credit Sandesh account. Credit Sandesh account. Yes. It is how when you apply this debit and credit rules of accounting. Debit and credit rules of accounting. Yeah. Let us take one more example. Yeah. One more example. 16th transaction. This is what this is check given to Asha rupees 10,000. Check given to Asha rupees 10,000. Which are the two accounts? Which are the two accounts? Which are the two accounts that are receiving and giving the benefit? One is Asha's account, one is Asha account, and another account is which account? Actually, it is a bank account. Here you are not giving cash. Suppose if it is cash given to Asha, two accounts were, one is cash account and another one is Asha's account. Here instead of giving cash, we are given check. Understood? So one account will be Asha's account and another account will be bank account because check always it represents bank. Okay, fine. Now, Asha is which account? Asha account is a personal account. Bank is which account? Bank is also personal account. Bank account is also personal account. Let's see to which account debit rule is applicable and to which account credit rule is applicable. Actually, both are personal account. What is the rule of personal account? Debit is the receiver, credit is the giver. So, who is the receiver? Check given to Asha. Check given to Asha. Asha is the receiver, right? So debit which account? Debit Asha's account because she is the receiver. Who is the giver? Check given to Asha. It means our bank account will affect, not our cash account. So which account is giving the benefit? Bank account is giving the benefit. Understood? So who is the giver? Banker is the giver. So which account should be credited? Bank account should be credited. Which account should be credited? bank account should be credited. Yes. So it is how we need to apply these golden rules of accounting, golden rules of accounting. Okay, let us take one more example, Yeah, these all transactions are actually pertaining to bank. Yeah, one more interesting transaction, that is rent paid by check rupees 2000. Rent paid by check rupees 2000. Okay, which are the two accounts here? One is rent account, one is rent account, and another account is which account? Have you paid rent by cash? If it was paid by cash, two accounts were, one is rent account and another one is cash account. Since it is paid by check, so one is rent account and another one is which account? Another one is a bank account. Another one is a bank account. Okay, rent is which account? Rent is a nominal account. Which account it is? It is nominal account. Why it is nominal account? Because it is expenditure. Now bank is which account? Bank is a personal account, because bank is institution. Okay. Now, yeah, which account should be debited? Let's see that. Yeah, here what is the debit rule of nominal account? Debit all expenses and losses. So since rent is expenditure, we have to debit which account? We have to debit rent account. Okay, then rent paid by check. No, who is the giver? Banker is the giver, right? So which account should be credited? Bank account should be credited. See here, rent paid by check. Understood. So rent is expenditure, nominal account, debit all expenses and losses. That is the reason we have debited rent account. Now bank is which account? Personal account. Understood. So what is the rule of this personal account? Debit is the receiver, credit is the giver. So rent paid by check, banker is the giver or receiver? He is the giver. That is the reason we are crediting which account? We are crediting bank account. Okay, so we have discussed almost 17 transactions in connection with the application of these golden rules of accounting. Yeah, just a minute. Okay, let us complete these three more transactions. Yeah, okay. Here, 18th transaction is a returned goods to Asha, and returned Rahul returned goods to us. Machinery purchased from Nitesh. Okay. Yeah, these are something related to purchases returns and sales return. Better we'll have discussion on these transactions in my next video. In my next video, again, I will try to come up with some unique kind of transactions, because I wanted to make that foundation very perfect. Once you people are perfect with basic aspects of accounting, that is what are the debit and credit rules of accounting and how to apply these debit and credit rules, then further tasks become very easy. That is the reason I am taking a number of transactions as example for applying this debit and credit rules of accounting. Yes, we'll continue it in my next video. Thank you so much.